All right.
All right, brother. We are live. We are live. Okay. Let me shout out to the Discord. Let us know that we are live.
Yeah. No worries. But I'm thinking it might be this whole thing with people I've been talking about this, that it could be that people would be eating out a lot more in restaurants during the summertime.
mm,
That's the only thing I could actually see why this would happen. Let's see. Net loss 53.2 million time non-cash expense.
yes,
All right.
it's a poor quarter. Very
Yeah.
poor. Very poor.
Well, this will
Um,
probably shock a lot of people.
it's shocked me. I
Mm.
cannot lie. And look at that, they're down almost 10% now.
Mm.
Well, yeah, welcome everyone. Welcome
Yeah.
everyone to the Q2 Tattooed Chef earnings call. We'll be starting in about 10 minutes. We have Jesse from Plant Stock joining me for today's Q2 earnings call.
Hey guys. Thank you for having me, man.
No problem, brother. Appreciate you being here. What's your first impression on the earnings so far?
Well, I tried to be realistic when I talked about this, what we could expect, but I was still hoping between 55 to 60 million because we know how well they've been doing, right?
Yeah.
But I kept speculating why Roth Capital had it at less than Q1, and they never really argued why they believed that it would be less. But my speculation was, could it be that people are going to eat more in restaurants, taking the vaccines now, being ready for waited over a year to start going out? So now, and people are on vacation, so people don't go buying foods in stores and frozen food as much. So, I'm thinking that could be the only situation why this has happened. So, I mean, that would make sense to me that people go on vacation, and we could see it from Beyond Meat's earnings. They had earnings last week, right? And they blew it out of the sky. They didn't have that good numbers when it came to their stores, but they had like 270% increase in restaurants, in food
Yeah.
service. So I think that's what we're seeing here. Well, obviously, to some extent, this is speculation, but it kind of makes sense.
Yeah.
So
Welcome to the chat. Can you see the chat, Jesse?
no,
Can you
I
see?
can't. I'm gonna see if I can. Okay, I see it now. Yeah, we have.
Yeah.
I'm looking at the iPad.
Yeah, we've got Kakaloka, welcome. We've got Vito, welcome. Johnny, Jose, Rebecca, uh, Assyrian legend, Kevin, Jose, Tim. Appreciate you guys all being here. Yeah, I mean, like what Jesse said, this really is surprising to me. The results. I had estimates of about 59 million in terms of top line, and that way off. Very way off in my estimates at 50.7. And then, as you can see here as well, a net loss of 53.2 million compared to a net income of 1.3 million in the prior year period. This loss includes a one-time non-cash expense of 46 million, resulting from a valuation allowance on a deferred tax asset, due to additional investments. But I mean, the main headline here is this miss, revenue 50.7 million. We're going backwards, Jesse.
Yeah.
We're going backwards.
But I'm not really. But I mean, again, I think to some extent, I mean, it is shocking to me as well. But again, I think it's. Yeah, I could just see it as, again, the vacation thing. People going on vacation because they've taken the vaccine, and not focusing or just going out in restaurants. I could see the number being really much higher, obviously, in Q3, considering the Kroger deals and all kinds of deals they're doing right now. So, I mean, yes, this does look depressing maybe to some people right now, but I mean, I think long term still, I mean, we're good to go anyhow, right? So
if you think, let's play on your thesis then. Like, let's say more people are eating out. less people are doing the take home food, obviously the frozen food and stuff. Is that a trend that's going to continue then? Because obviously, if things are opening up a lot more, and then if that is the case, is Tattooed Chef just a stay-at-home stock then, rather than a long-term growth stock?
No, I mean, I don't think so. I mean, I just think it is because I think everyone has been either waiting for vacation or going to restaurants for about 1.5 years. And I like most people, when you're forced to stay at home or do something you don't want to, and when it starts opening up, you're going to go bananas, right? Like if you maybe went to the restaurant once every second week or third week, now you might go out once or twice a week just because the heck of it. And I think we do know that way more people probably went on vacation. I know here in Sweden, anyways, I know a lot of people who just went to Spain and Greece and Turkey, and they just, no matter what, even though we have the D variant. But I think we'll see, again, really different numbers in Q3, considering that, like I said, Beyond Meat, they skyrocketed with 270% in their food service, but they also went down when it came to their stores. But they're speculating in Q3, they actually think they're going to have less numbers that they had now because they have so much food service, right? And they know that the D variant now is going to make things harder in the next couple of months when it comes to restaurants. So I think Tattooed Chef will probably fly back with a vengeance there.
Okay. I can see it's good. No, it's good. It's a good argument, but we've also got to look at both pictures. You know what I'm saying? And you're right. I mean, obviously, Tattooed Chef, we're expanding into the food service with our acquisitions of Foods of New Mexico. So that's going to be big going forward. But again, remember, these numbers are from, what was it? So second quarter. So from April, right? April till about June. So I'm wondering, is Q3 probably going to be worse than this? Because this is quite a miss. This is quite a miss. Like, let's just call a spade a spade. This is a miss. And as a result, I think, where's the stock now? We're down almost 10%. It's going to get absolutely crushed.
We might see it down in 15 again in the next couple of days.
Wow, that's insane. Yeah.
Wow. Yeah, that was actually surprising. Even though I wanted to try to be having two perspectives, and I talked about the Roth Capital speculation around 52 million being less, saying that we need to have that perspective as well. No matter how bullish we are, we need to still be aware of it. But still, even I didn't believe that we would have 50. So
no, it doesn't make sense. Like, if you think about it, like between April and June, I know, of course, we got the Kroger deal. Well, that was like in July, right? So again, that wouldn't count towards numbers. We got the Whole Foods deal again. I think that was beginning of July. So a lot of the recent major deals that we've signed all came after Q2, you could argue. But even in Q2, we're already Target, we're already in all of the other ones. Sam's Clubs, we had more SKUs in Target. So it's still a little bit bizarre to then produce 50, like less than Q1. Like, it doesn't add up.
But at the same time, I mean, to some extent, it doesn't add up. But every great company, they need to take a breather every now and then, right? And just try to catch up with those kind of numbers. And but yes, still shocking. There's no going away from it, no matter what perspective. But maybe now in the conference call, we'll get some more light to what's been going on. And I know this net loss with 53.2 million. I mean, that could also be that people found that out, panicked, and they don't really understand what's going on there. I remember them talking about that for several, I think already a half a year ago, that eventually there will be something that will be caught up. That's probably had something to do. I'm not sure if it had to do with overall SPAC situation.
Yeah. Like, if you look at the income statement, you can see the income tax expense took the large chunk. I'm not sure you can see.
Yeah, I can see it. And it's like this. Yeah, it's a
Sorry,
one-time
brother.
deal anyhow, right?
Yeah, yeah. They did mention it a one time again. Yeah, 'cause I think you're right. They mentioned it as a one-time tax.
Yeah.
Or that, yeah, let's bring that up again. Yeah, there. So yeah, so it includes it's a one-time non-cash expense of 46 million. So that's pretty much why we were suffering heavily on
Yeah.
our bottom line.
Yeah. So I
So
wonder how
so
much.
I guess there is a benefit from that point of view that it is a one-time expense, which they have clarified.
Yeah.
So I mean, I guess the question is now, Jesse, are you going to be selling? What's your play?
Nah, it's the same problem as always. I just wish I had way more money waiting on the side now because, again, I mean, people have been talking that we'll see this back at 15, and I'm being like, nah, I don't see that at 15. I think we're past that. But I got to say, when I see a 10% move like this and
Yeah,
people freaking out because,
yeah,
companies like this, that is a disruptive growth stock, right? People, they'll go hyped really fast, but they can, quite quickly turn around also and lose faith temporarily anyways.
there we
uh,
go.
so I do
All right,
see that.
brother. I think they're starting now.
Yep.
So I'm gonna turn the volume up.
Yep.
After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on your touch-tone phone. To withdraw your question, please press star, then 2. Please note this event is being recorded. I would now like to turn the conference over to Rachel Perkins, Investor Relations. Please go ahead.
Thank you. Good afternoon, and welcome to Tattooed Chef's second quarter 2021 earnings conference call. On the call today are Sam Galletti, President and Chief Executive Officer, Sarah Galletti, Chief Creative Officer and Lead Tattooed Chef, and Stephanie Dykman, Chief Financial Officer and Chief Operating Officer. Matt Williams, Tattooed Chef's Chief Growth Officer, will also be available for questions. By now, everyone should have access to the earnings release, which went out at approximately 4:05 p.m. Eastern Time today. If you've not had a chance to review the release, it's available on the investor portion of our website at www.tattoochef.com. Before we begin, I'd like to remind everyone that the prepared remarks contain forward-looking statements. Such statements involve a number of known and unknown uncertainties, many of which are outside the company's control and can cause future results, performance, or achievements to differ significantly from the results, performance, or achievements expressed or implied by such forward-looking statements. Important factors and risks that could cause or contribute to such differences are detailed in the company's filings with the Securities and Exchange Commission. Except as required by law, the company undertakes no obligation to update any forward-looking or other statements herein, whether as a result of new information, future events, or otherwise. In addition, within our earnings release and in today's prepared remarks, adjusted EBITDA is referenced. It is important to know that this is a non-GAAP financial measure that we believe is a useful metric that better reflects the performance of our business on an ongoing basis. A reconciliation of this non-GAAP financial measure to its most directly comparable GAAP financial measure is included in today's press release, which is also posted on our website. And with that, it's my pleasure to turn the call over to Tattooed Chef's President and CEO, Sam Galletti.
Thank you, Rachel, and good afternoon. I'll begin today's discussion with key business highlights, new distribution wins, and an update on our recent acquisition of Foods New Mexico. Then Sarah will discuss our marketing and innovation, and Stephanie will provide further detail on financials. Our momentum continued in the second quarter of 2021. Second quarter revenue increased 46% to $50.7 million compared to the second quarter last year, driven by our Tattooed Chef branded products, and $4.3 million from Foods New Mexico. Our branded product sales for the second quarter of 2021 were $33.1 million. This is an increase of 62% compared to $20.4 million in the second quarter last year. As a percentage of total revenue, branded products accounted for 65% or 71% excluding Foods New Mexico. I'm proud to say that we are well ahead of plan to reach 75 to 80% branded sales within 2 to 3 years. We believe Tattooed Chef is positioned to be the leading plant-based food company for years to come. With fully vertically integrated production, diversified product lines, and the ability to win in multiple areas of the grocery stores, not only frozen, but refrigerated and ambient too, Tattooed Chef is positioned for long-term success. We are revolutionizing the way people think about plant-based eating by thoughtfully creating foods that feels good. The Tattooed Chef brand is chef-created for every lifestyle and an accessible price point. The Tattooed Chef brand is for everyone, and we attract consumers of all ages and demographics. We also have a range of products to offer from breakfast, lunch, dinner, or snacks so that you can enjoy Tattooed Chef at any occasion. It really resonates with both consumers and retailers, as has been apparent through our sales velocities and product launches to date. We are proud to announce that in less than 1 year, we have 2 SKUs among the top 10 veggie entrees ranked by velocity according to the MULO HWI. As we previously announced, we closed our acquisition of New Mexico Food Distributors, Inc. and Karsten Tortilla Factory, LLC, collectively referred to as Foods of New Mexico, on May 14th for approximately $37 million in cash. Frozen Mexican food is a $1 billion category, and we are super excited about the growth opportunity. We will also be launching our first ever refrigerated ambient products early next year, going after the $20 billion Hispanic Southwest food category with alternative tortillas, burritos, enchiladas, and other creations. This acquisition expands our own production capacity and diversifies our manufacturing capabilities to accelerate our expansion throughout the entire store, not just frozen. We plan to extend the Tattooed Chef reach not only within grocery, but to a whole new level of convenience in refrigerated and ambient products to an untapped market of retailers such as airports, convenience stores, and more. In 2 to 3 years, between all the innovative ideas we have, we believe Foods of New Mexico can contribute up to $200 million in revenue annually. The focus going forward will continue to be on Tattooed Chef branded plant-based products. We continue to look for similar acquisitions that we are able to add assets in manufacturing in order to develop new products in other categories and create shareholder value. Our growth story so far has been around diversifying Tattooed Chef customers and channels, and we have been incredibly successful. As you may remember, at the end of 2020, our branded products were in nearly 4,300 stores and had 23,000 points of distribution. We have grown this to 8,355 stores at the end of Q2 with 48,070 points of distribution, exceeding our previous projection. As you may also recall, our guidance for the full year was 10,000 stores with 65,000 points of distribution. With the additional retailer commitments our sales team has secured, which I will cover in a few moments, I'm proud to announce that by the end of the third quarter, we will be in over 12,000 stores with 79,402 points of distribution. We continue to broaden our growth as measured by spends. Through July 11th, our TDPs have increased by over 135% since before closing the transaction in October. This is a strong example of the brand's viability and success in traditional retail and mass accounts. Our MULO consumption data as measured by spends continues to grow too. The second quarter of 2021 was our strongest quarter for measured consumption in the history of the company. I'm ecstatic to announce the last 24 weeks ended July 11, 2021, we had 4 of the top 5 best performing innovation SKUs in the plant-based frozen entree category, which Sarah will cover in a few moments. Overall, our quarterly consumption has increased by 88% since completing the transaction in October through strong growth in club, mass, and retail expansion. In the club channel, we had another successful MVM in Costco with organic rice cauliflower stir fry. We continue to partner and innovate with Costco with new items going into selected regions across the U.S. In Sam's Clubs, we had 3 limited time offers in Q2, tempura green beans with vegan wasabi ranch, rice cauliflower burrito blend, and our cauliflower pizza with plant-based pepperoni, in addition to our 4 everyday items. In Q3, we will have 3 limited time offers, including our Huevos Rancheros breakfast bowl, cheeseburger bowl, and a pad thai fried rice. According to SPINS in the club channel for the last 12 weeks ended July 11, 2021, Tattooed Chef is up over 60%. For the 52 weeks ended July 11, 2021, Tattooed Chef was up nearly 27% and remains one of the fastest growing brands in the frozen category. In the mass channel, latest 12 weeks through July 11, 2021, according to MULO, we saw explosive growth from $119,000 last year to $4.2 million this year, primarily driven by store expansion and the new innovation within the Tattooed Chef brand. We continue to be excited by the results of the retailers that were early adopters of the brand. The combination of strong shelf presence and broad category assortment has led to very successful results that we believe can be scaled across the marketplace. In one specific mass retailer, for the latest 4 weeks through July 11th, as measured by SPINS, Tattooed Chef has been #1 and #2 selling SKU in the frozen vegetable entree meals category in total dollar sales. Additionally, in the same category, the Tattooed Chef has the highest total sales per point of distribution of all brands being sold. These results support our growth strategy for expanded retail distribution and increased SKU count. We have more than doubled our ACV since the same time last year, and now we're in over half Walmarts in the U.S. and in almost every Target store. We continue to see TDPs increase in the mass channel. In the latest 52 weeks, we have grown our business in the mass channel from 651,000 last year to 7.9 million this year, and we expect this momentum to continue throughout the year. In the grocery and natural channel, we continue to win distribution with both national and regional retailers in the U.S. Our products are resonating with retailers and consumers, and it is a flywheel effect once retailers see our case study. In Q2, we went on shelf at Whole Foods, Harris Teeter, Jewel, Smart & Final, Nuggets Markets in NorCal, and a variety of independent retailers. In Q3, we have begun distribution at Sprouts Farmers Market, Kroger, multiple Albertsons divisions, including the Southwest, SoCal, NorCal, Intermountain, Seattle, also H-E-B, Price Shoppers, and have additional commitments for later this quarter. We are pleased to also announce our most recent distribution win. Tattooed Chef products will be available in public beginning in the fourth quarter. We are seeing our early retail wins expand their Tattooed Chef offerings into additional categories, which will increase the breadth of our distribution. We have set an internal goal of achieving 30 frozen SKUs per store across retail and are confident that we have the portfolio to execute that. We expect our incredible double-digit total company growth to continue, driven by our branded products in the back half of the year. We have multiple avenues for growth near term with expanding product offerings in existing retailers, gaining more distribution with new retailers, including grocery and convenience stores, developing our food service business, as well as licensing and international opportunities. In 2021, we are reiterating our revenue guidance of $235 to $242 million, which Stephanie will expand upon in a few minutes. We are thrilled with our retail wins and how products have been performing. These distribution wins were already included in our original forecast for this year. And given the timing of the equipment we are putting into our Foods New Mexico facilities in the fourth quarter, as well as selling cycle on what we will like to call the COVID hangover, we will not see the full benefits of these items until fiscal 2022. In 2022, we continue to expect at least $300 million in revenue based on our distribution success in grocery this year and our innovation pipeline, including the launch of our first refrigerated ambient products. We'll provide full guidance for fiscal 2022 on our fourth quarter earnings call next February. One of our key differentiators is our vertical integration and production capacity and capability. We have the ability to go to market in as little as 3 months, which gives us the ability to constantly innovate and stay on trend. We are on track to quadruple our production capacity in 2021 and have approximately 275,000 square feet of manufacturing space today. Between our 4 manufacturing facilities, we believe we have the capacity available to achieve over $500 million in revenue. Our new capabilities in 2021 include gluten-free, soy-free, plant-based meat production, and with the Foods of New Mexico acquisition, we can now produce alternative tortillas, snacks, burritos, handhelds, quesadillas, enchiladas, and more. Since launching the Tattooed Chef brand in 2017, we have seen the brand and our innovative products resonate and appeal to a broad range of consumers. And in 2021, we have demonstrated the strength of the brand with the acceptance of retail. We've done what we said we would do from the beginning. And we firmly believe Tattooed Chef has the power to be a generational brand and a leader in plant-based food for years to come. Now is the time to invest in our business and lay the foundation for future growth and success. Plant-based food is here to stay. Every category in the supermarket will be disrupted by a plant-based alternative, and Tattooed Chef is positioned to be the disruptor. We are already doing it, and it's just the beginning. And now I'd like to turn the call over to Sarah to discuss our innovation and our marketing efforts.
Thank you, and good afternoon, everyone. At Tattooed Chef, innovation is part of our DNA, and we are paving the way in the plant-based revolution. Today, we offer more than 62 branded items, and we are continually bringing new ideas to the marketplace. In fact, we have a pipeline of over 250 ideas for innovation, including more than 50 in the Hispanic Southwest food category, which we plan to produce at our new Foods of New Mexico facilities. As we continue to innovate as a brand and expand into more channels, we are excited about our partnership with Spins and the data insights it gives us on the new products that I am creating and the team is bringing to the market. Spins tracks the sales of the new items that have been launched over the last 6 months, and through July 11, 2021, the Tattooed Chef Burrito Bowl is the #1 best-selling new SKU in the MULO frozen plant-based entree category across all key velocity metrics, total weekly dollar sales, units per store per week, and dollar sales per store per week. Additionally, Tattooed Chef had 4 of the top 5 best-performing innovation SKUs in the plant-based frozen entree category launched over the same time period. Considering the other SKUs introduced during the same time period were from legacy frozen entree brands, we are excited about how consumers are responding to Tattooed Chef at retail. In Q2, we launched 14 new SKUs, including our multi-serve meal line at Target, and also a new Pitaya smoothie bowl, something we have not seen in mass or grocery yet. In Q3, we plan to launch 6 innovative items, including a cheeseburger bowl inspired by California flavors with meat alternatives, caramelized onions, and secret sauce. We're also launching rice cauliflower pad thai. It's sweet and sour with a little kick and uses nostalgic elements of pad thai. I'm especially excited about the launch of our new gluten-free plant-based chicken in our spicy Thai bowl, available now at Sprouts Farmers Market. We believe it's important to have a variety of meat alternatives in our value-added products to appeal to the growing set of consumers who are newer to plant-based eating. We are excited to introduce the Tattooed Chef to the food service channel as well. In addition to our ready-to-eat products such as entree and smoothie bowls, we recently launched an 11 SKU portfolio of Tattooed Chef products that can be used to incorporate more plant-based ingredients into their menus. These items are on trend, high quality, convenient to use, and help eliminate food waste, all important attributes in the dynamic food service industry. In regards to marketing, we successfully launched our first commercials in the beginning of April on a curated list of cable networks, connected TV, and digital media. We are pleased to report we have more than doubled our U.S. brand awareness from 6% to 15%, according to Millward Brown Cantor Research. After just a few months of advertising, purchase consideration for Tattooed Chef is approaching the levels of competitors who have been in the market for years. What we have learned from over the last 8 months is that the brand is responsive to advertising. We will continue in the back half of this year to have some other marketing initiatives, and next year increase our marketing spend with a disciplined approach to ROI. E-commerce is a minor part of our business today, but I am proud to announce that we will be launching a subscription service later this year as another way for our loyal consumers to shop for Tattooed Chef products. Now I'll turn over to Stephanie to walk through our financials.
I like that. I like that.
Thank you,
Very
Sarah,
good.
and good
Okay.
afternoon, everyone. In the second quarter of 2021, revenue increased 45.9% to $50.7 million, compared to $34.8 million for the prior year period. As Sam mentioned, the revenue increase was driven by a $12.7 million increase in revenue of Tattooed Chef branded products. This now accounts for 65% of our total revenue, as well as $4.3 million in revenue from our recent Foods of New Mexico acquisition. As a reminder, we closed the acquisition over halfway through the second quarter on May 14th, so this was only a partial quarter contribution. Gross profit in the second quarter was $8 million, or 15.7% of revenue, compared to $3.7 million, or 10.8% for the prior year period. The increase in gross margin was primarily due to the increase in branded Tattooed Chef sales and the investment in manufacturing equipment made in the back half of 2020 that doubled our production capacity in both the United States and Italy. Despite inflationary pressures in freight and container costs, which were $6.7 million during the second quarter of 2021, we were still able to leverage our operating efficiency and contractual buying opportunities for raw materials due to our vertically integrated business model. Going forward, we anticipate quarterly gross margin expansion throughout the rest of 2021 as we increase our branded volume and, as Sam mentioned, quadruple our production capacity. Operating expenses increased to $15.9 million in the second quarter of 2021 compared to $2.1 million in the prior year period. The increase in operating expenses was primarily due to promotional expenses of $3.2 million, marketing expenses of $2.9 million, and professional services, including legal and accounting, of $2.6 million. We do not expect operating expenses to decrease as a percentage of revenue over time, as many fixed operating expenses will be spread over increased revenue. We are also heavily investing in the Tattooed Chef brand to increase distribution, raise brand awareness, and drive sales in the new stores that are launching products. The costs that we are investing in today should produce realized benefits in the future. Net loss was $53.2 million in the 3 months ended June 30th, 2021, compared to net income of $1.3 million in the prior year period. There was a one-time non-cash expense of $46 million included in the second quarter of 2021, resulting from a valuation allowance on a deferred tax asset due to the company's additional investment. This adjustment does not affect revenue, gross margin, or adjusted EBITDA. Adjusted EBITDA was negative $5.9 million in the second quarter of 2021 compared to adjusted EBITDA of positive $2 million in the prior year period. The decline was primarily due to public accounting costs that were not present in the second quarter of 2020 and the operating expenses that were just mentioned. As of June 30, 2021, we had cash and cash equivalents of $140.2 million. Now turning to our outlook. We continue to expect total revenue in the range of $235 million to $242 million, an increase of 58 to 63% compared to 2020. We expect the base business, or rather excluding Foods of New Mexico, to grow 49% year over year to $222 million. This is consistent with our projections at the time of the transaction announcement over a year ago and includes the expected distribution wins in the mass and retail channels. We expect a $13 to $20 million contribution from the recent Foods of New Mexico acquisition and do not expect the second facility, Karsten, to have a material impact on 2021 revenue because of the timing of the facility being finished during the fourth quarter. We are updating our full year 2021 gross margin guidance to be between 16 to 22%. We are committed to an aggressive plan of growing our brand through extensive marketing and promotional spending that has already produced significant revenue growth in both grocery and mass retail. To augment our revenue growth, we have invested in our staff and infrastructure, equipment, brand visibility, and customer acquisition costs to meet marketplace demand and our current and future goals. We also continue to be impacted by increases in logistics costs, storage fees, legal and accounting fees, and marketplace shortages in packaging products. Given this, we are updating our adjusted EBITDA guidance to a loss of $14 to $17 million. Lastly, we expect capital expenditures in the range of $15 to $20 million for full year 2021, which includes our recent acquisition of Foods of New Mexico. Tattooed Chef has long runway for growth with both new and exciting customers and channels, an experienced team, and a strong cash position to support the growth of the business. With that, we are now available to take your questions. Operator?
We will now begin the question and answer session. To ask a question,
Q&A.
press star
Let's
then
go.
1 on your touch-tone phone. If you're using a speakerphone, please pick up the handset before pressing the keys. To withdraw your question, please press star then 2. The first question today will come from George Kelly of Roth Capital Partners.
Hi, everybody. Thanks for taking my questions. Maybe if we could start with your EBITDA guidance for the year. So, bit of a change the last time you updated us. So just curious if you could maybe bridge exactly what that, I think it was $2 to $4 million before. So just what are the primary, could you kind of break down the difference?
Absolutely, George. Stephanie here. We are going to spend an additional $3 million in marketing during the back half of this year to take advantage of some of the opportunities that we have discovered in order to build more brand awareness. We have also been building our infrastructure and hiring experienced, talented individuals in what is a very tight job market right now. And we want to build the foundation for that infrastructure, not for the sales and distribution of today, but the growth of this company next year and the year after. In addition, there is also inflationary costs to freight, cold storage, other logistical items, and upcoming increases in both packaging costs, corrugated, and even pallets. And combined with these, we felt that it was important at this time to make this adjustment.
Okay, understood. And then next question is just about all the distribution wins. So the amazing progress on door expansion and distribution points. what's next, I guess? I mean, I'm not trying to get too far ahead here. It's been a really crazy year, I know. But what do you think the total opportunity is? If you were to look out maybe to the end of next year or a couple of years from now, I mean, is 12,000 doors and how many distribution points, like where can you take that over time?
Hi, George. This is Matt. So, obviously, thank you for the compliment. We're equally as excited about the results that we've had this year. So I think that, there's really a two-pronged approach. I mean, the first is, we obviously have established relationships with the retailers that we're with today, but Sarah has created a lot of amazing product that not everyone has been accepted. So I think that, we're really encouraged by closing those voids on the categories that retailers that we're with today are not carrying. So I would say, that's job one for the sales team is to get to that 30 SKU target that we talked about. What we're really excited about is that our SKU acceptance quarter over quarter is actually increasing. So we started the first quarter with about 4.4 SKUs accepted per retailer. In Q3, we're going to be up to 7.7. And so we're really excited about the fact that we're seeing almost like a double or over 60% SKU increase in our SKU counts that are accepted when we launch with a retailer. And so that's really encouraging. The next thing that we're also going to be focused on is still closing a lot of the gaps that we have in terms of customers that we are not with today. We do have regional as well as other customers that are not doing business with us yet. And then we also have opportunity with other major retailers today to close store gaps. So, those combined with all the innovation that we have coming, we are obviously very bullish about what the future holds in terms of getting to that 30 store or that 30 count of SKUs across the market.
Okay. And then the push, this has come up on prior calls, but all the success you've had, I mean, exceeding your target to start the year as far as doors and distribution points, and guidance is staying the same. And so, is there something that is, maybe you've seen pressure in certain channels? I don't know if it's club or is the kind of initial velocity in a lot of these new channels maybe not what you thought it could be, or can you talk at all about just the reasoning that goes into maintaining the initial revenue guidance?
Hey, George, Sam. So it's really a function of our projected, acceptance to the products that we thought that we were going to. We really had some good knowledge of the wins that we were going to get on these retailers. And that's really it. We really projected pretty aggressively our guidance on the acceptance of the brand based on, what was happening with club with us. And that's why we're solid right there. And like, like was mentioned in our review right now was that, because of the timing of distribution through the year with these retailers getting all this product on the shelf, that's why we really feel we won't feel the full impact until 2022 of all these wins that we're getting with full distribution and the promotional programs that we have planned for 22 now. So
exactly,
that's why we're excited about exactly what's happening. I mean, the wins and the acceptance and the increase of sales per week and units per retailer, it's all very. So it's really incredible. It's very positive, and we think we really got a tiger by the tail here. And
Yep.
We have so many different categories, and because of our capabilities, any one of these sections that we're doing right now, whether from food to New Mexico, us stating that within 2 to 3 years we really believe it could be $200 million, and just with our existing facilities, it's. We could be we are over $200 million. So to hit that first point of $500 million in revenue, we feel pretty confident that that's the direction and the opportunity is there for us.
Okay, great. And then last question for me, just an accounting issue. I remember on the last call, there was a feasibility study that was going on having to do with how you treat certain, whether it's operating expenses or should they go into the cost of goods sold line. Is that settled? And are we comparing apples to apples if you look back to last year's second quarter? And that's all I had. Thank you.
Thanks, George. It's Stephanie again. So we are comparing apples to apples when we talk about second quarter last year. We have not concluded on the preferability study, and we are still working on it, and we're hoping to be able to provide an update soon.
Okay, thanks.
The next question is from Rob Dickerson of Jefferies. Please go ahead.
Great, thank you so much. Sorry to keep this short, it's a lot of ground covered. I guess, first question I have is just on the revenues in Q2 relative to Q1, right? And I know you called out that some of the private label business, I call them losses, sounds like they're more intentional exits. It seems like, those potentially offset maybe some of the branded growth and also, the $4 million included from the figure in Mexico. And I'm just asking because the growth obviously is extremely impressive, right, year over year, but technically the revenues were, a couple million off relative to Q1. And I would think that kind of with some of these new wins, we see it be going up, not down. Then the delta here is private label. I just don't know what that was. So if you just provide color on that delta Q1, Q2, that's the first question.
Hi, Rob, this is Sam. So if we were 100% grocery and mass, and then I understand where there would just be this increase of quarter over quarter, because we're still, the majority of our brand is still in club, it's based on these LTOs, these limited time offers and the distributions and the timing of when, these things happen. So, but overall, it's like you see, we're still up over in the year in club year over year, but it's just from a timing standpoint, that's all this is. So, we'll see in Q3, I think that you'll really start to see more of this consistent growth start happening as our grocery and mass market starts becoming a bigger part of our company.
Thank you.
And so I as far as private label goes, it's pretty much flat. You're absolutely correct. The focus is definitely been branded, and that's where we're really pushing.
Hey, Rob, and if I can just...
Sure.
Sorry about that, Rob. It's Stephanie. If I can just add to that a little bit, remember that when we look at last year and we talked about the quarter over quarter, and we experienced a lot of growth in 2020 as well. But we did see that big peak in Q1, and we talked about it. It has to do with organic months and a lot of limited time offers. We ran a very large acai promotion with Costco, and we did run a promotion on organic stir fry, but it's just a blend of products right now at club. So when we start to talk about quarter two, I think the big focus needs to be on the fact that we grew 46% year over year in quarter two, and we had great growth in quarter one year over year. So this is a little more cyclical for us as it was last year. And we expect this to even out in the future as we expand into more mass and traditional grocery. But those wonderful, club items were fantastic in January. And we will see some of those limited time offers in Q3, as Sarah discussed. So there is a little bit of that happens throughout the year, but it is still 46% growth.
Yeah, okay, no, it completely makes sense. It's just, it's a function of club exposure, which I get. Okay, cool. And then I guess, usually along with LTO, there's some promotional activity, right? Some promotional spend. So again, if I'm thinking forward, then, would you say collectively, like as you think about the back half of this year, marketing spend goes up a little bit, you're getting into new stores, right? So it's important once you're in store, you want to make sure the velocities are good. Then maybe like there could be some deal activity, kind of near term Q3-ish, but kind of overall, there could also be just some kind of upfront promotional activity to also make sure you're getting the brand going, in the new stores. Just trying to get a sense of how you think about that promotional dynamic.
So what is the plan so as we continue as our retail and grocery math is going to start coming out more aggressively in the second half, absolutely, that's why Stephanie suggested that, what she said, that we're going back in with an additional $3 million promotion, spend on the back half of the year. And still, against all the products with all these major retailers, there's tremendous marketing plans that are already built into this. And I know, Matt, if you want to.
Yeah, no, I think you said it. We're, this extra $3 million that we've got built into the plan, George, is all around, we did the broad campaign to build awareness. That money is now there to spend to drive velocity, right? We're getting closer to the retailer. We want to make sure that our new distribution wins are successful. And so we're really investing in programs that are there to drive purchase and conversion at the point of sale. So that's where you're seeing that come in.
Okay. Yeah. Fair enough. And then I guess just to come back to the margin question, obviously I understand, what's driving that, that lower EBITDA in the near term. Sounds like you said you're hiring more people. So I guess the first question, it seems like essentially you just sum it up and say, tell me if this is fair, relative to where you were in Q1 and Q2, you said, okay, we actually got some new wins. We need some more people, need to hire some more people. And then, as we've heard from a lot of the companies, there are also some other incremental costs that are coming in, be it, product cost, packaging, freight, what have you. So it's really like there's $3 million, right, in the marketing side. But then, there's, call it, another, $10 million or so, that are other costs. And we're assuming that those other costs are the buckets that you explained. Is that just trying to get a sense as to kind of like what kind of changed through the quarter that made you decide to, or let's say increase your overall cost basis outside of the incremental marketing promo stuff?
They've already answered this question.
Absolutely, Rob. I think that when we start to talk about inflationary costs, that some of these items were things that as we looked at them at the end of the year and even through the first quarter seemed to be temporary. And I believe that a lot of people assumed that we would be more on a road to recovery by this point in time after the pandemic than we currently are. And the fact of the matter is that freight and container costs do not seem to be decreasing. Fuel prices do not seem to be decreasing. And there are things that we can all see. And so we would like to take the conservative approach after analyzing our data and the information with our providers in logistics and things of that nature, that honestly, after we saw the increase of roughly 1.84% in freight and container costs when it's taken as a percentage of revenue compared to last year, we want to be very cautious in this. We are starting to hear things about packaging shortages and paper shortages and those types of things. We make sure that our raw material inflation prices were not going to be an issue in the back half of this year. We've talked about it. And it's one of those things in which the things that we are able to control and do better, we are. I know that I have heard other companies who have quoted higher inflation rates on some of these items. It's not that we're necessarily doing better than they are. We've just made other changes within our system and within the infrastructure to help mitigate some of those costs. And we are focusing on costs, which will improve the gross margin within the operations themselves.
Okay, good enough. That's all I have. Thank you so much.
And this concludes the question and answer session. I would now like to turn the conference back over to Sam Galletti for any closing remarks.
Thank you for joining us today. We're pleased with our results for the first half of the year and expect our momentum to continue in the second half. With our incredible brand, innovation pipeline, manufacturing expertise, and with the team and resources we have available, I believe we are well positioned for long-term growth and success. I look forward to speaking to you again at the upcoming investor events and on our third quarter earnings call in November. Have a great day.
Thank you. The conference is now concluded. Thank you all for attending today's presentation. You may now disconnect your lines. Have a great day.
Okay, and that's a wrap. That's a wrap.
Yep.
I don't know if you can see this, brother, but if you take a look at my screen, you can see the institutions. They've started buying. It's at this point where retail investors will start getting upset by the fact that we missed estimates. We're down a significant amount. Where retailers are now getting out because they're just fed up, pissed off, hate the results. Now you're seeing institutions, they're starting to load. It's crazy.
Is it BlackRock 400%?
That's BlackRock. Yeah, bro. That's BlackRock. 387% change. So BlackRock are starting to load the boats. You've got JP Morgan as well. They're also now loading. Right at the point where retail investors are getting sick and tired of the stock. And you know what, bro? This is why I love earnings calls. This is why I absolutely love earnings calls, because when you look at the earnings release, you're like saying, oh, snap, we're down. We missed estimates, right? But Sam reiterated, our revenue still increased 46% year over year. I mean, come on. What did you think? What did you think of the earnings call? It was really good.
I think it was good. It was quite. Every time when Sam first talked and then Sarah talked, it was quite repetitive. I felt like what they have talked about before in Q1.
Yeah.
But I think that's because we can't. I don't think they consider that everyone listens again. I'm sure there's a lot of new people listening in, right? So that probably is a good thing. When they talked about that Sarah has this 250 SKUs in her mind that she wants to do, and having 50 being in the Hispanic sector, and their goals, where they're going with the money now. But it actually, the more they talked and the more information we got, I actually don't think anything when it comes to long term is bad, right? Because it's basically what Sam is saying. You have to invest money, right? You have to keep reinvesting with the marketing. I think it was Sarah who said when it comes to brand awareness, was it in US? It's gone up from 6% to 15
to 15%, bro.
That's
in US
huge.
brand awareness.
That is huge.
That's more than double.
Exactly. It's all about brand awareness, right? When you want a company to really fly off with time, it's all about brand awareness. So, and being such a new brand in itself, I think it's incredible. I don't think there's any other company out there right now that's, whether it's plant-based or not, that are making these kind of moves in the food sector. So I think this is still impressive, and it's kind of like what they talked about when it came to the stores, right? Because I had to have beside me what I wrote from the last conference call. And they were planning to have about 7,200 stores by the end of by Q2, but apparently 8,300 stores, so 1,100 more stores, right? And then what did it say? 1,200 stores by the end of Q3.
By the end of Q3.
12,000, right? And we were supposed to have 10,000 by the end of the year. So I mean, that's incredible.
12,000 by the end of Q3. 12,000 stores, and our target, like you said, bro, was 10,000 by the end of the year.
Exactly. So I mean, that's the thing. I think we should obviously be aware of what's going on, and no matter how bullish we are, we need to have all the perspectives, right? We need to be aware of what's going on, but it's so much more than just revenues. I mean, especially now, it's still a company that is disruptive and expanding like crazy. So I mean, we're talking constantly around, now it was like 46%, around 40 to 50, sometimes 60% growth, and that is tough, to keep that going all the time. So every great company and everything in life really has to take a little pause, a little breather, so you can keep coming up with ideas, being more innovative. and like she talked about also, I think it was Stephanie Diekman. When it comes to their infrastructure, obviously they have more facilities to think about, right?
Yeah.
And then when it comes to staffing, that's been huge things here. So I think that's something to keep in mind and be humble and look at the big picture here. Like you said, I think we're looking at really great things here coming out of this conference call.
And I mean, if on your point of looking at the big picture, if we look at it from a year-over-year perspective, 46% top line growth. Okay,
yeah,
that's still really impressive. Okay, for a company that's still phasing out of private labeling and pushing towards our branded products. Sam said it. We're pretty much flat for our private labeling, which has been a massive contributor to our top line growth in the first place. But that was flat because we are pushing our branded products and our reach. And what was your thoughts on the additional spending? So they said 3 million additional spending in marketing. Because I think it was. Oh,
yeah.
Is that me or you? Oh,
no,
sorry. 1 second. Yep, sorry.
You thought I was in there doing stuff with you.
So there's an additional 3 million spend in marketing now, and that's obviously to do with inflationary expenses as well, which we all knew was going to play a role. Do you get what I'm saying? It's
I think we would have seen way higher money there if it wasn't that they were an vertically integrated.
Yeah.
So I think we should be happy about that. But I actually do like that they're spending more money on marketing because that's what's necessary here, right?
Yeah.
I mean,
it's clearly working as well to go from 6% to 15% in the US awareness, like they mentioned. Right. The marketing spend it's working.
Yeah. There's no question about that. I mean, what do they say? Proof is in the pudding. I definitely that's what we're seeing here. So and that usually that's what I talk about too often is that I want to see a expanding growth company like this. I want to see them reinvesting the money right in marketing. Brand awareness is key to get anywhere because no matter how good a product is, right? If people don't know about you, it really doesn't matter. If they're not chatting about you, talking about you, raving about you, it doesn't matter what kind of product you have, how superior it is. People need to know about it, right? So, and it does seem like they're getting to know about it.
Yeah. They also mentioned in Q3 we've pretty much already begun distribution in Kroger, Nugget Markets, HEB. That's already, so we're going to start to see the results of that distribution in these new retailers as well in Q3. And I think Sam sounded really excited about Q3. Like, he did sound a lot more optimistic about Q3. And I think, it's true. And in Q4, they mentioned about Publix. We're going to start distribution in Publix in Q4. So I guess if you are looking at the company or the business from a quarter to quarter perspective, then probably this is not the stock for you. But again, with a long-term perspective, looking at the fundamentals, looking at the wins that we have achieved this quarter, it's been pretty much a lot of it's been fundamentals. Do you get what I'm saying? Right. Even though I would argue that a 46% top line growth year over year is still a win, in my opinion. Again, not many people are going to be happy with it, but for me, I think it's a win. The fundamentals, the groundwork is being laid essentially for us to really take off.
But like we talked about before the conference call started, I noticed one of the commenters said that now they don't believe that it has to do with vacation and people going out to restaurants, but I totally believe still that is one of the biggest cases here. I don't remember they actually mentioning too much about that in the call.
No.
So I was kind of expecting them to mention that, but again, I mean that when we see these kind of numbers with the competition maybe or someone who's in the same sector like Beyond Meat, that they had worse losses now in the stores compared to last summer, right? Because last summer it really hadn't started hitting right the same way it's doing now, but they had way better when it came to the restaurant. Again, 270% change. So I think that is telling us something that people are going to eat more at this moment. The question is, like you said before, which is actually something to keep in mind, is that well, could it be worse than in Q3? You know, because depending on,
I don't think so. After the earnings call,
yeah,
after even Sam talking about distribution's already begun in Kroger.
yeah,
We're going to see these results in Q3. So
yeah.
prior to the call, I maybe have been a little bit not too confident, but after hearing what Sam had to say in the call, I'm
Yeah.
confident. Yeah, that Q3, I have no concerns there.
No, and also
Yeah.
that even if that could have been a concern before, I think also considering that this has been when people in March, April started to take the vaccines and started going out eating more and more, then now we've known the last couple of weeks and last 1 or 2 months, constant chatter, right, regarding the D variant, right? People becoming very nervous again, talking about shutting down, right, in different countries, in different states in the US, using their masks again, right? And no matter if you're using, if you're double, like I said, double Pfizered up or not, right? You've taken the 2 vaccines. Now, when it comes to the D variant, it's still not, it's protection. It's you should definitely do it, in my opinion, in ways, but it's around 63-64% protection right now. But when it comes to obviously the serious stuff, going to the hospital is still like you're protected to like 93-95%. But that's obviously going to be in people's minds when in these couple months. So I do agree that it's probably going to benefit Tattoo Chef again.
We shall see. What's your thoughts? This was a nugget that they dropped. I think it may have went over a lot of people's head, but someone actually commented it, and I put it up there for a time. Subscription, like what's that about? I heard Sam talk about bringing in a subscription service, and
it's about time.
It kind of just went over my head for a minute, like because I was like, wait, what? Slow down, what? What's so we want to become a SaaS? Are we getting a SaaS business model? Like, what's going on there?
Well, I know, like you and I, we've talked a little quickly about the Very Good Food Company, right? The Canadian small company. The 80% of their business so far has been e-commerce, right? They've done really well with that, and that's also the thing when it comes to e-commerce and how well known you are in social media, because they're basically, I don't know, like a 10th when it comes to sales, if even that, when it to Tattoo Chef, but they have like double the amount of people on Instagram and double the amount of people on Facebook, like 75,000 to 80,000 soon following then, where it's only like 32 or 33 for Tattoo Chef, right? And I think that has a lot to do with people ordering from the net. That's still, I think, for Tattoo Chef, is still going to be a small thing to begin with, but I think in the next 3 to 5 years, that is going to be more and more common, I think. So going into that now, focusing on that more, I think will eventually benefit them really much.
I think so as well, but I think we do need to do. We need to work a lot harder on building our social media presence, which they have been. I mean, our Instagram followers has been going up. Twitter, all of our social handles, we are seeing a huge increase. So I guess I don't know if it's too soon, but at least they're thinking about the idea of introducing a subscription model to our business, which will bring in obviously recurring revenue long term. And it shows again that the management are forward thinking. Do you get what I'm saying? Like, how many food companies do you know employ a subscription model? I can't think of many off the top of my head. So that's the sign again that we are thinking forward, and it's pushing us forward thinking, should I say. What else in terms of what else?
I think that's what they should be doing, right? Because they're already a plant-based company that's disrupting everything, and it's all about the environment and health. So this, it goes up with where there should be, so where they'll be able to be in front of the competition longer and longer. So I think that's what we want to see.
I think it's fantastic. So I really, really appreciated this earnings call. I think it was settled some nerves for some investors. I've seen in the chat, we had a lot of bears in the chat.
I noticed that too.
There's a lot of bears, a lot of trolls in the chat, but it is what it is, man. I mean, if you want to look at the company from a quarter, if you want to judge the company just from a quarter by quarter basis, then you're not going to do really well in any investment, any stock, to be honest.
No. And you talk often about not only Peter Lynch, but was it Christopher Meyer's book, 100 Baggers, right?
100 baggers.
And I started reading that now too, since you talked about it, and I'm loving the book. And then they're basically, it's basically saying that in the book that in the long run, if the people who make money are the long-term investors, no matter what you try to come up with. So people who are only in here for a couple of months and complaining about not making money, this is actually, if you want to reach whether it's 100 bagger, 50 bagger, or 10 bagger, I mean, it's going to be amazing anyhow, right? So, and if that's what you want to reach, and you want to see what's happening right now that is kind of stagnated as a stock, because as long as you're part of the conference calls, you understand the products, you understand the markets, you should know that this is going places. Someone said that also, this company is going places. And if you know that, now is the perfect opportunity to just, come with a barrel of money and just, put it
back
in.
the truck up. Back the truck up.
Exactly. So,
I think we're gonna wrap it up there, brother.
Yep.
Thank you so much again for joining me for this earnings call. I want to thank everyone as well, all the Tattoo Chef shareholders. I felt it wasn't the best quarter. But again, we're not judging the company from a quarter-to-quarter perspective. If you want to look at it from year-over-year, fantastic quarter, fantastic financials, fantastic fundamentals. But there's still a lot of work to be done. I think that's my biggest takeaway. There's still a lot of work to be done. I look forward to more future growth with this company. So guys, check out Jesse from the Plant Stock channel on YouTube. As you can see, my brother knows what he's talking about. My brother knows what to talk about. So check him out.
Love talking about the chef with you.
Yeah. Thank you, brother. Thank you. And guys, appreciate all you guys. And we'll catch you in the next one. Take care, guys.
Thank you.